Yeah, I cannot trade, so I choose trade index.
Oh, really? There's two things. Oh, cool. Okay, that's really a big deal. Yeah.
They're really like, they spend a lot of time. And then it's like, speakers these all logistics. Phil can't do that. So you have to shut up Phil because he's giving
so it's actually going to say that
nobody's going to talk about it.
Okay, so basically, this grand prize is 1K 500 250, and then there are two sponsored prizes, a 1K prize, and then a 3-tier DRW historical edition bonus. And I'll put my data sets. Those data sets are not included. Okay, so actually, after I give you watching the video,
Churchy, I can do that.
Legendary.
Yeah, it's very
Very cool.
cool. Next time.
Oh, really? Oh, you saw it?
It would be beneficial to people who are trying to stand more of
It's something like
Yes. Her night, I love the wait, it's all on that now. Optimizations on that. It's big time. Talking is off the tree.
well, those are totally compatible. And I showed myself. More or less what's so I think that software
She did both. She made it
nuggets technically the repetition is really showing So I think there's some idea. This is actually the first definition. I can send you
all the way back and I'll
Yeah, thank you. It's already been recorded. It's like, we're done.
Oh, but it's like, oh, okay, never mind. Yeah, I'll stop kid there here. I'll leave it. I brought him in.
I don't know what the guy Yeah. So 30.
AI adjacent. Not quite, but more vibey. Yeah. The high. I mean, it can be very small. No, I mean, from a probability point of view, it's come on, lazy. There we go. So, but yeah, that's no, just JP Morgan. Yes, that's kind of what we're to at the moment. But there is a fintech element of some these guys, looking to fund science, which I think is a great use case for these guys. Which is a and I think AI is going to be a great lever for that because essentially we're trying to find the low cost treatments so cycle affordable, low cost treatments that are better and basically he's giving me like 25 grand a year.
I mean, this guy's a beautiful year for the house. It's like, another house.
So there's lots of elements of that. And then we're going to try, I've got another company helping members run the trials based on the same 25 grand. You should pass like 20 grand to apply at the end of the trial. I'm actually working on London, but I'm planning on it. I was working out of London. I want to nice thing out from, but I mean, you know, I'm ultimately about, you know, like finding abundance and all that. I think we're kind of very big on why. It's like aligning AI with like keeping us like alive. Yeah, that's my favorite thing. That sort of thing. I mean, I don't think it's an answer. I'd like to be. I think it's something that's probably the I'm making some very this is how I get I'm more actually on the legal IP side, but I do quite crypto as well. But I did bio, so basically try to combine those two things with AI to find them and that's the big thing is, we're trying to bring down the cost of healthcare for everybody. Scale
Do you need help?
Water topics. Water. Yeah, that's good.
That's like everything. You know, a lot of you know, a lot of times you want to talk to someone, look them up,
Welcome to the AI Finance Hackathon! Woo! Typically, quant finance has issued the use of neural networks, signal-to-noise ratios, and the latency requirements of centered models like ridge regression and the lasso as the sort of centerpiece of quantitative training. But today, deep learning is going to make a comeback. We are at a precipice. There is a massive overhang of fantastic technological progress. The ability to analyze images and videos and make trading decisions, the ability to go into history and use neural nets, a new category of model whose representation quality is unprecedented, to understand the quantitative history that it should inform some trading call. And more deeply, the ability to build autonomous systems, the autonomous capital systems where AIs are hiring and firing, where AIs are making investment calls or are deciding, who to short. And pragmatically speaking, there's a creative future. So you here can invent, for example, the prediction AI that is the future of how we come to understand what's true, where breakthroughs in understanding who's going to win an election through mechanisms like prediction markets open the door to automated systems that understand the world perhaps more effectively than you and I can. And so it is a joy to welcome you all to the AI Finance Hackathon, where it is my hope and vision that we can have a fantastically creative set of days where we build some incredible technology together. So my name is Jeremy. Welcome to AGI House, and we try to calcify the spirit of Silicon Valley, which in my mind has a number of beautiful aspects to it. So we are a high culture. We love mathematics and computation. There's this soul of creative heroism. We worship the founders of companies which come out of creative moments of invention like you might experience here today. And fundamentally, we are inventing a new art. We have generative art, we have generative video. We are really creating new modes of representing reality itself, where human brains used to be the only way to come up with high quality representations of the world around us. And to be clear, there's a sense that the economy of Silicon Valley, whether it be the crypto scene where you can expect to be able to make payments with AI systems in an automated way, or it's the economic mechanisms like Google's second price auction system that allowed them to make the billions upon billions of dollars, which funded labs like Google Brain, where I and others were inventing novel machine learning algorithms, are all sort of central to the sort of Silicon Valley project. And so it is a joy to be a part of that. You come in a great tradition, so actually this is sort of the original AGI House Hackathon with sort of myself, my roommate, Andre Karpathy, Kyle, who's been instrumental in organizing this, and all of us hanging out. This is 3 years ago, that's September 2022. And some of these people actually were building what turned out to be $1 billion, for example, $1 billion companies. This is Arvind Srinivas before he made Perplexity. So please do sort of be inspired and know that there's an ability for a hacker who has a creative idea to turn it into something that truly changes the trajectory of human civilization. And I guess there's just so much up for grabs today that I'm stoked to take down with you guys. But at a high level, the plan is this. So we're going to hear a few talks from some fantastic sponsors, folk who have been building and working at trading companies, novel sort of compute exchanges, and that will provide you with some data sets which might be inspiration for worthy projects. And then I will hand the mic to you all to describe your creative idea to one another. And so hopefully you can find a friend, a collaborator in this room, with whom you will build some project of substance, and speaking your vision can sort of clarify it and get feedback in the next few hours, so that as you're building this weekend, you have the support of someone brilliant and who could turn into a great co-founder or a future collaborator, and ideally a good friend. So with that, let's hear it for Awashi Bandara, the head of AI at DRW, where markets are made.
Let's look at their laptop.
Oh, okay. All right. Hi, everyone. All right. So, anyone? Okay. So, anyone here like trading? Anyone that trades frequently, somewhat frequently, enjoys it? Oh, yeah, there's quite a few people. Okay, that's good. All right. So, DRW is a diversified trading firm. We have offices pretty much everywhere, every major city that has markets. The company was started about 30 years ago by Don Wilson, so we're not a small or a young firm. We've been around and been successful for quite a long time. The newest office is in Palo Alto. We just opened it like 6 months ago, less, right? Like something like 3 or 4 months ago. Feels like longer. Yeah, it's been a really interesting experience, kind of being in the Bay Area. I've been here for about 10 years. Doing startups and but being at the intersection of machine learning and trading. The problem in my team, on the AI team, we think a lot about more traditional things like what kind of machine learning models might be good for markets, but also more novel kind of, like the question we ask ourselves is, what does it mean to do quant finance and think about these types of groups in 2025 versus like 2015 or 2005, right? There are firms that have traded traditionally or traded like in a systematic way for 20 years. We know who they are. There's Jump, there's Tower, there's XTX. These are very successful firms that have been around for a while. But as you guys know, being in technology, if you've been around for a year or two, every year that goes by, you inherit tech debt, you inherit kind of a worldview, a way of doing things. So the question we ask is, what does it mean to do this stuff in 2025? I think one of the big advantages is just being able to integrate a lot more data into the investment process. The reason that we use Lasso, Ridge, more linear type models is that it fits numerical data better, right? And what we want to do, and kind of what challenge you guys to do, is think outside the box and think about the less easy to work with data that you can pair with numerical data, right? So the problem that we have set up is, can we go to the problem statement now? Yeah, so we want to set up we want to look at interest rates, for instance, right? So interest rates and FOMC meetings. How do these two things interact? Interest rates are obviously the numerical representation of what actually happens, but FOMC meetings are the context, right? So we want to understand in this project, how do you, if you were to take a particular period, what period in the past is the most like it? And the reason we want to set that up is this is how traders think about, this is how you build intuition. This is what it means to be good at trading. You see something happen and you have something in your history, something that you've seen in the past that makes it triggers something, right? So you think, okay, this is what's happened before, this is what happened after that, and that's what goes into like informing, this is how I think I should express my view in markets, right? You do this whether it's interest rates, you do this whether it's a volatility, a macro trade, equities. Most people don't make decisions based just on like a stock, right? Like saying a stock went up 30% means nothing, right? If you know with certainty that when a stock goes up 30%, it's going to decline by 20% the next day, you're definitely not buying that stock, right? If it's up 30% and you know that there's some reason because they beat earnings or some other reason that's fundamentally qualitative, or that there's like Nvidia, right? Like there's some macro trend, some tailwind that the stock has that's going to drive up that price. You're going to get into that position and you're going to hold it. Like let's say a stock went up 30, let's say NVIDIA went up 30%. I hope nobody got out of NVIDIA with that first 30% pop, right? Like that would be a bad trade. So we want to figure out how to get agents to think about these things systematically. So that's the broad problem. It's like how do you build intuition into trading problems? And we want to express it with this particular problem, which is given macroeconomic trading regime today, like given this Fed policy outlook, what period in the past is the most like this period? You can think about this problem using RAGs or CAGs or like however you want to think of it, but it's not a really good fit. You want to think, I think, more generally about it. Like we were having some conversations earlier, and some of the feedback was like, you can do this with more traditional data. You can, and we have, right? But I think that misses the trick. I think there's a more creative way to think about this problem. This is why we're talking to you guys, because I think, we think that, and Dom thinks that the most creative people in technology are here in the Bay Area. We really want to see how you guys will take a crack at this problem. I think the prize is what, $1,000? It's $5,000.
$5,000.
All right, it's not 1,000, it's 5. Hopefully that anchored you to the lower number, so now the 5 seems even bigger. So the $5,000 prize. And so when we look at solutions tomorrow, it would be great if there is a solution. But I think what we're even more excited about is to see like what creative ways you guys have like approached the problem. Like, is there something that no one on my team has thought of? Is there something that's so out of the box that maybe we can scale that solution either into like an actual trading strategy or incubate the idea in some way? Anything's on the table. We do everything at DRW, right? But yeah, that's the setup. Happy to answer any questions.
How are you going to evaluate the entries?
Oh, that's the hard. These guys are here for that. I don't do the hard questions. I just do the stuff. It's gonna be it's hard. We thought about some benchmarks for it, but there's not a good way to benchmark that. I think so. We built a solution to this in house, so we have a view of how our solution works, right? And so we'd want to see if it gets even close to that. And again, like we interact with these models every day, so we have an intuition for it. Like I said, so there's a chance that you might think of something that you simply can't do in a day and a half, right? And I think that's completely fair. So it's not like we're gonna look at what were you guys able to push in like 30 hours or 36 hours and then say, okay, that's the best one, we're gonna go with that. We're much more interested in like, is the approach truly creative and truly out of the box? No one's thought of this. There's really a there, and we want to push into this as much as possible. So it's a very subjective is the short answer.
Thank you. We usually do a panel of judges, too. We sometimes add like a surprise person as kind of like a tiebreaker. But yeah, think of something that makes someone say, "Wow, this is like really different and interesting direction."
Yeah. So,
but in this case, there's potential for a quantitative benchmark. So you could put out a set of basically simple solutions and their performance on a quantitative metric, and we could compete against those pre-existing simple solutions.
It's hard to quantify like what a good solution is. Like so much because this is a question we get from traders. The reason we built this is we get this question from traders all the time. So for us, this is not a quant solution per se. This version of it that we're talking about now is more of a tool that we would give a discretionary or a fundamental trader. This could be, from a systematic trading standpoint, this could be step one in building a systematic trade, right? So like you were saying, we have quantitative, like numerical inputs into models that we typically get from interpretable models like, Lasso or Ridge or whatever, right? But we want to see whether we can train a model with an output like this that effectively represents intuition. Right? There's no numerical input for that. So if we can make this work, this could be, a step one in like a 5-step process for building a more robust model, right? Yes.
A more general question. I'm curious to know what's your opinion with like this push on interpretability research, like in machine learning. I mean, typically it's more large language model, but I feel like this extends to other models as well. Like, I'm just curious to know
we spend a lot of time thinking about that. We're hiring people that can help us with ideas like interpretability. It's an essential part of what we do. We need to figure out how to get to at least some version of what we get with a ElasticNet type model, right? Like something that gives us like feature importance or something like that with deep learning models. It is the biggest weakness right now in this space. It's a weakness not just from a practicality standpoint in that we don't want to lose money and not understand how we lost it, but let's say we could live with that. It's also a regulatory problem, right? Where if we do a trade, say that's really profitable, like, you know, prop trading firms typically have to defend sometimes, or not typically, but sometimes have to defend how we came to those trades, because insider trading is a thing, right? So if we can't defend those positions with the regulator, saying like here's specifically how these models, how the model came up with the output, that's a problem. So for LLMs and closed source models, this is an ongoing problem, right? Like where if we don't have control over how the model is run, it's not just interpretability, but even reproducibility is a problem, because we're not guaranteed that if we run the model twice, we'll get the same output, right? So we spend a lot of time thinking about it. We're building some solutions for it, but I would say neither we nor anybody else is a good solution to that right now.
I don't know how much you can talk about it, but the thing I mentioned yesterday is I appreciate how like quiet you guys are as a company, but how many like serious moves you make in the AI space.
Yeah.
I know you can't really talk about a lot of it, but like all you say is like, I know you do that. Is there any like opportunity here for like entrepreneurs or builders to like get more involved on that angle? Like problems
100%.
you're interested in, stuff like that, things you're investing in?
Yeah, I think everything is on the table. Again, like this is not it is a big company, it's got a lot of people in it, but decision making is very fast, right? So Don spends a lot of time in Palo Alto. Don Wilson's the founder of Don is BRW, right? So decision making is very fast. So like I said, like if we come up with a solution, let's say it doesn't have a trading application, we can't use it, but there are other ways we can kind of partner with people or interact with people, for sure.
Nice.
Everything's on the table.
Fantastic.
Many thanks for watching. So for clarity, they're going to give you a real-world data set, and it is actually, you know, a really fantastic moment. So he's describing AI agents, which are going to try to basically take the intuition that a trader has and represent it. And that could be as big a distinction as, say, using a vision language model to look at the kind of graphs and charts that are typically, you know, on top of a trader's screen and interpret what is going on in those charts using visual intuition rather than using standard data. And there was last year this fantastic breakthrough in scientific research where you could say to a model that had access to a CSV, you know, the raw numerics data set, try to find some set of patterns, and say to the exact same visual language model that had a visualization of that data, look for some set of patterns. And the visualization check discovered far more useful and valuable patterns than the one that was just looking, you know, at the numbers in a raw way. And so there's so many sort of really creative ideas that can come out of multimodality, but also we just still know how much, you know, these tools can be used to quantify intuition. So good luck with the creative venture. So up next, we have a talk by Brett Bromley, who's working on mortgage automation. So there's a question of whether, you know, you and the people around you are creditworthy. Who should we give money to, and how can we, you know that they're going to be reliable? Well, they have an AI solution for that. And so I do give a warm round of applause to the presentation from Brett.
So I don't have a presentation. I had no idea what this was all about. This is my first hackathon, and so I'm really excited to be here. Thank you. Just meeting a few of you guys, I'm already blown away by the level of talent, intellect, creativity in this room. If you guys can't solve some of mortgage's problems, nobody honestly will. I really find that there's very few opportunities to truly impact change the mortgage industry is the #1 industry in the entire United States. It's one of the biggest capital. That's why too big to fail was a big government push. And it's kind of a stack of cards, to be honest. Mortgage bankers are definitely not comfortable in this room. They're not known for technology and innovation and investment in those areas. They truly believe their technical administrators could be their sister. And so it needs dynamic change. It needs creativity to be able to do something big. We've been a tech company, a vendor in the space for about 10 years now, and really focusing on individualized problems inside the mortgage space. It's really difficult for any vendor to take on all of it at once, and I think that in itself lends itself to agentic AI. Come in and solve little micro problems that maybe feed into other issues or combine to solve a bigger problem. We predominantly focus on the decisioning of a mortgage. Look at this wall of books. There is probably just as many underwriting guidelines and variances of how to do a mortgage loan as there are books on that wall. And a mortgage underwriter is expected to know them all and not make any mistakes, or they have to buy a loan. Sometimes $1 million comes out of the lender's pocket because they make one mistake on page 400 of some obscure reference library. We try to analyze all of that information and then apply it against the parameters of the individual doing the loan. I think that's one use case that you guys could solve for sure. When it really comes down to it, there's only about 8 types of mortgage loans in the industry. Maximum, government, conventional, and then oddball stuff. Now, where the variance comes in is everybody wants to do it a little tiny bit different. So the job of AI could be to standardize the large-scale loan programs and then identify where all the variances are coming from all the individual lenders and people and states, locales, all those different things, and serve up that information as a tool for people to make decisions faster, or to preferably just do it automatically. There's massive regulatory burdens in our industry. It's kind of a black box. Any of you guys from the mortgage space at all? Or one guy in the back, too. You know, of course, Michael, hope from Addy AI. 2, right? It's a black box. People don't know what it is and how to get into it. They don't understand it. Even big names like Peter Thiel goes, I'm going to conquer mortgage and I'm going to raise $1 trillion for Blend. Anybody work at Blend, by the way, before I do this? Right? They came in and told the entire industry they were going to digitize it. They quite literally came up with a questionnaire on the website. That was it. $1 billion company like that. Right? The opportunities in this space are vast. The problems are relatively low-hanging fruit. So we want you guys to kind of come together and take a look at some of this data, the regulatory guidelines which you'll be provided, and see if you can figure out ways to understand it, extract information, serve up anomalies, identify standards that are there, and then compare it against the loan data. You could also take an approach, I don't know if we have the data set, but we'd really like to come back and do one of these again and provide a huge data set of borrowers that have already qualified. What are their payment histories? And then is there something about those particular borrowers you could predictively model and say, before we even look at them, we know they're going to qualify? That would be brilliant. A little bit further ahead than I think the industry is ready for. So we're going to try to focus our energy on just understanding the guidelines and how it compares to the loan data. That's probably the focus. Another one that I think is really a fun place to spend is computer use. So lenders, again, as I already told you, they don't invest a lot of money in technology. Well, they do relative to other investments, but the technology is dated. And the people that fix it are oftentimes putting in like all sorts of little workflows. And for a company like us, that's brutal to write standard software around, because you might have a pop-up error, a message box, a requirement that the software is asking you to do. We didn't program that because it was specific to one individual, or one lender. So by using computer use, you could actually look at those message boxes, those dialogues, and make some extrapolations of what to do in those scenarios, and then automate it, solve it, or at least queue it up for a human. We use RPAs today to do that, and man, I hate those things. I don't want to work on RPAs ever again. So
what's an RPA? I'll ask the
robotic
question.
Process automation. Just
okay.
We script and say at this point on the computer screen, click OK. Well, what if it shifts a little bit? Right? Like I have to have error logging, and I've got problems. I've got to solve it. It crashes. It waits. We've got to build all those different things. So I think AI is perfect for a scenario like that. Our website, if you were to navigate to lendertoolkit.com, we have 50, 80 plugins. All of those plugins are designed to do one specific little problem. You could probably apply some AI components to that and solve that problem. And then, what did Google release this week? A chain of agents, right? You could chain some of these processes together and do things. Another example, I met somebody from logistics earlier today, and we were talking about logistics and how it relates to mortgage. Well, mortgage people have to go out and collect all of this information from consumers. Bank statements, pay stubs, income data, your tax returns. And then when they look at that data, they often find something else. Well, you could have agents do individual components there, serve it up to an underwriting agent to then analyze that data, and then automate mortgage. The industry came out with a statistic that said that the worst thing that people could do is apply for a mortgage right below going to a dentist. Which is really a weird concept when you think about it. One of the reasons are, if any of you guys bought a new car recently, or bought a Tesla, right? You can do it on an app in like 5 minutes. Mortgage is like pulling teeth, and you know what? That house is not going to get up and drive away. It's always there, so why is it so hard? I think the overall cost to originate a mortgage is $15,000 per loan over the past 2 years. Have you guys heard in the news the mortgage market's collapsed and interest rates are really high and everything? You probably don't know that every single loan that's been originated in this country for the last 2 years has lost money, right? So banks are bleeding, now they're loaded and that's fine, right? But they've been using their war chest, but they're losing money on every single loan. So there's opportunities for us to turn this around, automate it, provide a way better customer experience, and I hope you guys can do that. I'll leave you with one other kind of question. Which of you guys like Lamborghinis, Ferraris, supercars? Okay, get some more hands up. So the winner of the competition, I think we're going to be, our company's sponsoring that. We're going to fly you guys out to Las Vegas, come in the wind, hang out with our team. We have a huge supercar event at the Las Vegas Speedway. We put all of our customers in supercars, and we want to put one of you guys in there too. It's a networking event, so you'll connect with some of the biggest names in banking, like TD Bank, PHH, Chase. All of these guys are some of our customers that we work with on a regular basis, and they would love to meet really powerful people that know how to use and be creative with technology. So hopefully you can help. If I can answer any questions, let me know.
Yeah, I'm not from mortgage industry at all, but how regulated is it? And the only reason I'm asking is because tech part is usually easy to build, and then it's, healthcare is a prime example. You can build all kinds of cool stuff, but just doesn't pass the red tape. Mm-hmm. Is that the case with mortgage industry too?
Yeah, adoption is a huge problem. So one of the challenges are, if you have an AI model, our friend from DR, you were just barely talking about that. Trust is paramount. And in mortgage, you must be 100% accurate 100% of the time. If you're off by a little bit and you provide wrong context, that loan could be unsellable on the secondary market. And that's $500,000 like that out of these people's pocket. So what you have to do is build a lot of systems in place to let them know how you came to those conclusions and validate the information, make sure it's accuracy, so that we can impact change with the regulators. It's one of the most highly regulated industries in the country.
Oh, wow.
So one question I have is about the lack of fractionalization of real estate resources. So ideally, say I own this house. If you think that it's valuable, you should be able to, as with the public market, get some fraction of the ownership of the house if I choose to let you. But as far as I know, nobody has digitized the sort of stock market, the housing market appropriately. And I wonder what bottlenecks there are to that kind of implementation, which in my mind would allow for AI models to say trade on their understanding of what housing is likely to be valuable in the future.
Yeah, wonderful question. I've been thinking about that a lot. And in fact, I met up at Silicon Summits. Silicon Slopes is in Utah. So we're also, piggybacking a little bit on San Francisco. Some love there.
Can you repeat his question? I couldn't hear it.
Yeah, his question is, why are more people not allowed to fractionalize or trade on the asset of a mortgage? What are the obstacles? So one thing is putting it into a secure platform. So right now, and one of the other vendor partners is MCT Trading. I'll give them a shout out in just a minute. They trade these commodities. They trade mortgage-backed securities. So for all intents and purposes, if every one of you guys own a loan, we could pool all of your loans together into a mortgage-backed security, and then we could trade that asset based on the average mean of how well you all perform and what the interest rates are, and there's metrics that are analyzed there. So how does an average consumer participate in that? Or how does the consumer participate in maybe just this house? I think that's a problem to solve. I think blockchain, smart contracts are probably the direction I would go there, is making sure that you know when the loan is originated, the accuracy of that loan, who owns it at that given moment and where it's at, so that you could have more people kind of pile on to owning the asset.
Have you heard of roof stock?
What's that?
Roof stock?
Roof stock, I don't know.
Yeah, I had a friend that was there, but I think that they were trying to like fractionalize the ownership of that loan, like we were talking about. Yeah, the guy said it was an absolute nightmare though. I think because of the reasons you were saying, like just all the paperwork and how different. Yeah, like it was just like the overhead was so high that like I think he just left. Yeah. Like 6 months in, he was like, this is insane.
When you fractionalize a home,
what?
The paperwork over?
Yeah, and then like, yeah, I mean, I don't know the details, but I think that was part of what was contributing to the stress buildup.
Okay. As I said, the only other thing I would want to do less is get a dental. So you're totally right. If 5 of us got together and wanted to buy a house, we have to form a trust or a company, and then the company buys that. And that's what happens in fractionalized real estate today. It's possible, it's just one of those obscure guidelines, and you have to do it perfectly. And the average consumer doesn't know what those guidelines are or how to fit that criteria, so the process is fractured.
It sounds like a Masterworks actually, like fractionalized, like art.
Yeah, really similar concept to that, absolutely. I think the way you'd solve that is probably after the transaction, where everybody right now is trying to do it before the transaction, and then they all own the house. That's complicated. I have 5 people's income I have to analyze. So, in my opinion, it's better like buying an NFT of a home, and then owning a piece of it, and you get rights to use the home or something. I don't know. I have no idea.
Yeah, I think the general agenda is, people are building compute markets, like, TSAX and SF compute. There's a stock exchange, but most assets are just not on markets. And so where's the generalized market? There are prediction markets, but actually where's the generalized market? Real estate seems like huge. It's shocking to me that it is not already cleanly fractionalized and investable, partially by anybody. But yeah.
I think the industry is moving towards that. So the largest software in our space is a clear monopoly. I won't quote that, but it definitely is. It's owned by, what used to be called Ellie Mae, and they owned Encompass. They own 80% of the market share right now. And you might ask how that's possible. Well, there's a lot of relationship building that goes on in banking. So recently, Ellie Mae was acquired by ICE. You guys know what ICE is, Intercontinental Exchange? So the same people that own the stock exchange now own the biggest software. They didn't care about the software at all. They were buying the data that moved through this platform, and I'm pretty sure they're going to try to monetize it, put it on a ticker tape, and let people participate in it. So, any other questions?
Thank you, Brett. So up next we have Michael Vonley. He is the CEO of Addy AI, which is also using AI to automate the mortgage process. And he has a solid set of hackathon resources for you all. Let's hear it from Michael.
Thank you, Jeremy.
Also, shout out to Michael that this hackathon happened because he walked into the house, came to the table on a random day, I never met him, and said, I want to do a hackathon with you guys. And I said, that's what are you doing? He's like, traditional finance. And I'm like, okay, I never thought we'd do a hackathon on this and hold everyone together. So kudos, Michael, for pushing for that and doing something weird to make it happen.
You're welcome. So the story is actually quite interesting because right before Christmas, I met up with Brett in Utah, and we went on this really long drive, and we were talking about, well, how can we get a lot of people excited about mortgages? And one of the things Brett mentioned was, well, no one wakes up every morning and says, well, I can't wait to automate mortgage. I can't wait to disrupt the mortgage industry. And I said, I think it could be done, and I know the exact guys for that. So came out to Kyle and Jeremy, and they were able to make this happen. So I run Addy AI, and essentially what we do is we live on the side of working on the loan before it gets to the loan officer's desk. So before the decision is being made, before underwriting and everything. So we want to bring as much loans into the pipeline for Brett's company to underwrite and make decisions for. So we work with loan officers and independent mortgage banks. So here are some resources that we've put together. Brett mentioned underwriting guidelines. We have Fannie and Freddie guidelines. We have a JSON file of 1,000 guidelines. These are file names that could serve as proxies for what's actually in the file. So if you open this one, you can get to see, these are all regulations that go into underwriting a loan, and every now and then the regulations change, so some of them have dates. This is a regulation that was set January 24th, 2024, and then literally like a couple hours later, another overlay was added on top of that. So these regulations are actually what determines whether or not a loan is viable. So play around with that. We also have document classification extraction APIs. So you could, if you have documents that you want to extract information from, you have free APIs that you can use. So this is an API that's accessible to everyone in this hackathon. We have API keys for that. And some sample documents that you can play around with and some sample ideas too in this file. I generally think that this year is the year of production grade AI agents. If we look at what happened this week in AI, we had the Stargate announcement, which essentially provides infinite compute. And then we have OpenAI's Operator, and I think we have DeepSeek R1, and like Chinese researchers are eating our lunch right now. So we really got to step up to see what we can build. And I'm just really excited to see what can be done in this hackathon. So thank you so much. This file will be provided on Slack, and looking forward to it.
So what is your favorite hackathon idea of the 5?
Ooh. I like zero-touch mortgages. Yeah, I think like there's nothing stopping an AI agent from originating a loan, making the decision, closing the loan, and funding the loan with no human in the loop. I think that's something we could achieve here.
Question.
Yeah.
So like for the guidelines ones,
Yeah.
do you have more pictures of guidelines? You just put one.
Pictures?
Yeah, there was a table of guidelines in the document.
The matrix?
Yes, but there's just one matrix.
Oh, we just grabbed a random matrix. I think if you Google guideline matrix, there are many that are publicly available. This is just an example.
Okay.
Questions?
Another one. How are these regulations applied? Like when a mortgage comes in, is it like a document or like a folder? Like what's in it?
So it's a document, and if you are a loan officer, you have to know what's in the document.
It's like a packet, right?
It's a packet?
Yeah.
Yeah.
Is there like sample packets somewhere of like approved, not approved?
So that's the hard thing. We were talking about this the other day, which is, well, how can you have a repository of these documents and have accurate change logs? Sort of like a Git repository where when things change, you know what changed, who changed it, when it changed, and things like that. There's this website called AllRegs. They do a decent job at it, but it's really clunky and, you know, the updates are not very regular. So if you're a loan officer and then you work with, let's say, a wholesale lender, you have to contact them for their updated guidelines, and when the updated guidelines come in, they send it to their mortgage brokers and people who need to have them. So that's also another idea, I think, maybe like GitHub for regulatory guidelines.
How would we in the hackathon map guidelines to like map like packets to the rules? Like how would you usually do that? Like the engineering problem.
So there's a sample file here.
Yeah. Those are the rules.
Yes.
How do you know like what goes against the rules? Because you get a decision at the end, right?
Right.
Or feedback, which is also interesting.
Exactly.
Right?
So there are loan programs. So let's say, for instance, there's a loan program like FHA loans. And then there's some sort of like maximum LTV that you need to have in order for the loan to be valid. What you could do is find all mentions of LTV in the document, and then do some RAG approach, but that really doesn't scale well. You have to do some sort of like test time compute where you find a lot of dimensions of it, and you have a reasoning model that, let's say, reasons about, well, which ones I should go into, which files I should really extract information from. And then once you do that, you have some sort of reward model that rewards whether or not, let's say you find comparisons between different guidelines from different lenders, and then you can compare those guidelines and just show it in front of the loan officer, and then they can make a decision about it. So I think a combination of some sort of RAG with test time compute is the way to go, because these files are huge. This is like a 1,000-page file, and I hope you guys have fun playing around with it.
Okay. Up next, and last but not least, who here has paid for a GPU in the last year? Very cool. So you may be curious about whether or not you got a phenomenal deal. And Carmen can tell you, because her company, Silicon Data, has a total historical representation of the prices of each GPU by type over time. And so she's advancing price transparency for compute more than anyone. Let's hear it for Carmen.
Thank you. All right, so before I start, I do want to talk about my trading experience. So I started my career at DLW Trading. I highly recommend the place. I don't know if they're recording or not, but in general, it's a great firm to work for. Had amazing 4 or 5 years that totally distorted my worldview, because that was my first job. It's super meritocracy based. If you love that, you will love DLW. I remember the first time I was literally finishing my option trading training, so I know nothing, like 4 months into my job. I just emailed Don, say, hey, I think it's a great opportunity. I forgot what I wrote. And he wrote me back right away, saying that, have you thought of those? I was like, I can't believe you're writing me back so quickly. And yes, that was a dumb idea. So that was, shows that I was nobody. He had no clue who I was. I was just a new graduate, joined the firm. And that was fantastic. So that not only encouraged me, unfortunately, to keep sending him ideas. I don't know how he liked that, but all those things, feedback and watching everybody here, it's so easy to talk to. It's completely in an environment that encourages for the best idea discovery. Everything is very transparent, very fair. It's factual based, not personal based, right? I also joke to my friend, I can be a dog, it doesn't matter. You have a good idea. Right? So that's what I love about DLW. I think the culture, the team is much bigger now, but I believe the culture stays very strong in that sense. Obviously, they have the best, assets, a lot of great talent all around. So I couldn't say enough good things about DLW team. So that's my plug. So I know for transparency, Silicon Data also invests by DLW, but we'll see the same thing if they're not my investors. Obviously, it's pretty interesting. I left DLW a few years after I joined. I left 5 years later, but still a very close connection. So this idea came up. Obviously, Don knows who I am, so he's like, "Oh, sure, perfect." So this is pretty awesome that when your investor knows who you are when you were 20. He knows my bottom is pretty, starting point is pretty low. All right, so Silicon Data, our focus is, our thesis is, and also in the background, I used to trade crude oil, natural gas options and futures, market making for those markets. So one of the things very intuitive to me is, I know a lot of price discovery, a lot of risk management happens in option world than the spot market. And it's very, very critical financial infrastructure for a lot of different sectors. If you think American line, right? They don't just call OPEC saying that, hey, let me sign a 5-year long contract with you to fix the price for oil. They don't do that, right? They just use futures and options in the open, transparent, liquid, flexible market to do whatever, to hedge and to speculate and to do whatever they need cheaply, efficiently, at different durations, right? So a lot of different industry, they have those infrastructure ready. Look at corn, look at any electricities, anything. They have a very robust commodity market globally. So that's how a lot of capital can come in effectively and cheaply. Banks come in, they can benchmark risk profile really quickly. They can do a lot of things in a very transparent way. However, compute, because we grew so quickly, obviously spot compute market is also booming, which we would like to see, right? So you have different avenues you can find the compute you need, not just relying on a few hyperscalers, right? So a lot of things we like to see this a vibrant spot market. And also spot market is critical. The futures options market is also very instrumental for the whole industry. So imagine if most data center build out right now is money from private equity firms, asset manager firms. So they have a return threshold, which is much higher than banks, right? You imagine banks' money can come in that supposedly will low cost for every single player in the whole industry. That will benefit all the participants in this room, right? So we like to provide a lot more financial infrastructure where people can express their point of view using option futures. Therefore, everyone can really benefit from flexibility and the transparency. So that's a high level. I'd love to share some data with you guys. So we started a company last March, so we have some interesting data points. So there's two data we're really tracking globally. One is the retail prices, so think about refurbished, secondhand, just retail prices globally. The second price we track is rental prices, so per GPU per hour. So I believe some of you, if you run GPUs, that's usually they are paying, right, unit the metrics. So the retail prices, we think about it, it's like perpetuity rental model, right? You just rent fiber and then residual value, and then what's the value? And then since the market is very fragmented, there are a lot of price discrepancies between France, Singapore, UK, and US, right? And then we think the price discrepancy might increase because all the export, we have import regulation being put on by Trump. So that's really interesting. Doesn't matter how things move, we're tracking H100, A100 mostly. Our database is a lot, but those are two main ones that I talk about because people use those two the most. Everything's mostly trading above launch prices. So in a way, you can think about it almost like today, someone mentioned Ferrari. You bought Ferrari today, and a year later, you use it for a year, you can sell at a higher price. The Ferrari can sell at a higher price. So that's kind of interesting, right? Those are not like branding. It's just utility-wise, the value stay pretty stable. So it should tell you a lot about the resistance and how much people actually use and care about use A100, H100. Retail chart. So this is really talking about the availability. So initially, so this is a snapshot of this month. I actually had a snapshot of September when we do the similar events. We saw a huge increase of the GPU availability in Singapore and UK. So in September, the chart we did, I don't know if people remember, a lot of the US, right? But this doesn't translate to there's no availability, there's no GPUs in the US. It just means not available, right? So a lot available in UK and Singapore. So that's kind of interesting. This is the GPU rental prices. I don't know if you experienced that. So the H100 definitely comes down and stabilizes the price here. A100 is come down a little bit as well, and then stabilize around. You can see it.
Full screen. We're doing it full screen.
Yeah, it's a good idea. Is it better? I can send it down to the slide channel if you don't see it. So for the H100 stabilized around 2.47, and the A100 stabilized around 1.22.
Numbers.
Thank you, Jeremy. So that's again the global average. It's not a simple average, but it's a global average. So through API integrations, we have like country-specific data. Every country behave a little differently. So here, right? So this is some of the rental prices breakdown. So the average prices in different country, and then lower is the availabilities. We see a lot of availabilities in Netherlands, a lot of US, depends on what chip you're looking at. So it's really interesting to see the changes, especially we see a lot of stuff coming in the Middle East. So this is like, I can think of those almost like a range of volatility, whatever you can think those traded prices. So you can see certain time period where A100 and H100 last year, third quarter, the big price range, a big volatility. I think people know what happens. The few large AI-centric startup may going out of business, in the business. So whenever big inflow of inventory, that will change the price quite a bit. Because the market is so fragmented, they couldn't really take the liquid order, right? It's a lot of people, it's very hard to absorb this influx of demand very quickly, so the price reflect that. And right now, the Q1 is only month 1, so it's pretty skewed, right? It's January, so we don't know what this quarter gonna look like as well. And also the price, which is pretty makes sense intuitively. On-demand prices is always higher than reserved, and the interruptible price is always the lowest. Because getting interrupted, so that's always the cheapest way to get compute. It's a carbon emission. I don't know if people here cares as much, and right now every watt is a watt. Then it's carbon footprint, but some European company really care about. Let's say you're paying AWS the same price anyways. You may as well pick a place where have a lower carbon emission. So different grid have different carbon emission based on the grid energy sources. For example, California, the grid is very efficient. The grid energy sources pretty clean, so we have a pretty lower carbon footprint than say places in Texas, right? Even country have different grid information, and also country level. For example, Australia, very low coal, definitely have higher carbon emission than France. Majority of France, not all France, but. So we have products. One called Silicon Navigator. We publish the daily prices of different GPU clusters, both rental and retail, and some reference data and some derived values. Really measure the energy efficiency and price per flop. We also have carbon emission data, which is updated quarterly based on the grid information as well. So you tell me what chips you use. We use the DTP number based on the chip type, times number how many hours you're going to use it for, and then based on the local grid information, we'll tell you what's the carbon emission based on that. Everything we do is API product, by the way. Silicon Mark, I think it's a really cool product. So one of the pain point what we observed is whenever people transact GPUs, right? Let's say I tell you, hey, Kyle, I'm renting a bunch of GPUs. You're like, great, but who are you, Carmen? How am I going to trust you, right? So it's very hard. It's no third party coming and benchmark those GPU clusters. It's a valuation problem. It's a pricing problem, right? I mean, you can argue it should be a price for everything. If my GPUs, clusters sucked, but there should be a price for that. If it's great, there should be a price for that as well. So we come in and benchmark. We would a quick test. It's basically a on-premise SaaS. You can download agent, run a bunch of matrix tests. As example, we'll tell you the flops 32, flop 16, memory bandwidth. We grab the UID for those GPUs. We tell you, hey, Carmen is not lying. She says H100 is actually H100, and here is the time spent stamped. This is the third party verify this, and then you decide based on performance how much you want to pay, how much you want to rent. So again, we think that's very valuable transparency people can use in this market. Yeah, that's it. We're also hiring benchmark engineers. If you're interested, then we're a remote only company, so come talk to us.
I just realized you're making a Carfax for GPUs.
That's correct. That's how I explain.
Any questions for possibly the person who knows more about pricing GPUs? Anyone else?
I'm curious about your data collection. Are you concerned about some data centers or companies withhold their compute data, their performance, etc., which puts your data at a position of being skewed or not an accurate representation of what actually is going on?
That's a great question. So a quick examples, right? So number one, we have over 30 different sources of data globally. So, and then we do have a pipeline where we figure out which price that we're not going to take. For example, if you're someone, hey, you're just going to grab the market, you charge 0 cents, 1 cent for all H100, we might not take your price, right? And also, if you think about your payment, right? Think of payment information. Everybody's, your credit card transactions, payments are getting sold left and right? But in general, we only need 30% of the whole US population payment data to have a very accurate forecast of any payment trend, revenue trend for any single company. Only 30% is accurate enough, right? So we don't need everything to extrapolate a really good, healthy prediction and then price point.
Are you anticipating the use of the Navigator product for setting the spot price when I want to block capacity for a P-series instance on AWS, for example?
So the price navigator is, so there's different tiers, right? So the one I showed, the global smart average, is something really used for, like, for example, your data center, your just, tech company trying to figure out what price should I be really be charged or charging people, right, either way. And then, so that's really used for that. And then the granular level data is really used by financial services firms. For example, like every single country, what is the everything trading at every single time, right? We did an analysis between lead lag. Is retail leading rental? Is rental leading retail? Are those leading to hit for the revenue forecast for next quarter, right? Even not just for NVIDIA, but for TSMC of the world, right? So they use all of those data, granular level data to do those analysis. And obviously, a version of that would be for index creation.
Very cool. Let's hear it. Okay, great. So I am about to hand the mic to you, but before we do it, let's just take a really brief tour through the hackathon's prizes, which can sort of set your intentions for the projects that you'll propose. So first and foremost, the person who makes the best use of mortgage guidelines, the team should say, will win $1,000. So the full statement and data sets are linked here in the parcel. We'll also send it out over Slack.
As well as the super car trip.
Yeah, and as well as a car trip. Hotel and airfare to Las Vegas. Yeah, hopefully it's in your interest. Secondly, there's a general prize. So this is for any project with Hackathon. It doesn't have to use mortgage data, and it doesn't have to be using the sort of historical data, though those projects are also definitely open for the general prize. It's first place, $1,000, second place is $500, and third place is $250. And then thirdly, last and not least, but actually most, DRW is offering a $5,000 first prize prize for historical event prediction. And it's this very open-ended research problem, and so do wet your creative juices on it. So it's currently 1:13. So I'm going to set a 3-minute timer. The request is that there be total silence in the room for 3 minutes as all of you add to the spreadsheet. So you'll see the spreadsheet blow up with action. But basically, take whatever project you currently have in mind and add your name and project description. And that way, as everyone is deciding what to work on and who to work with, they can all see your project intention. And so, basically, are there any questions about that? I'm going to start a timer, 3, 2, 1, and then everyone's going to go to the finance spreadsheet. I'll just send it out on Partiful and Slack just to make sure everyone has it, so that you can all fill in your intention. Any questions about that? Yeah?
The lightning talks are different things.
So you'll be able to pitch it publicly, but everyone's going to fill this out so that we know what everyone's working on. So basically right after this.
So I filled out the other sheet.
Yeah, you should add it to this as well.
No, but add it to both.
Yeah, exactly.
Okay. How do we get on the Slack?
You should check your email. If you're approved to the event, you have an email with a link to the Slack. Yes.
What's the Wi-Fi?
Attention is all you need. After the famous 2007
Yes. And the network?
AGI.
All right, thanks.
Yeah, sure. Any other questions before we jump in? Okay, silence for 3 minutes. Everyone add your project to this spreadsheet in 3, 2, 1. Go ahead. No talking, please, while everyone is adding your project to the spreadsheet. 2 minutes left. If you have not already added your project, please do open the spreadsheet and fill it out. I just sent it out to the part folder as a text blast as well. $60 seconds left. Everyone in the room should have a proposal. So we're only at 6 right now. There should be at least 20. So please do, if you haven't already, add your project. And to be clear, this is not a hard commitment. This is an idea that you may be interested in. So you're not tied to it in a hard way. It's just so that when people are talking to folk and looking over the projects they could consider working on, that the option shows up to them. Time. Okay, so the fact that I have 24 people in the spreadsheet and only 8 people with projects is, oh, you're all using lightning talks. Okay, fair enough. Okay. Yeah, it's not the end of the world. If you're looking for projects, please do look both at lightning talks and at perspective projects. These sound spreadsheets. Okay, and with that, let's get lightning talks started. So we're going to go in order. So if you're signed up for lightning talk, please stand in a line here, and it'll be 1 minute, 60 seconds per talk. So if I call you down, it's not personal. It's just because we hit 60 seconds. So nothing wrong. Let's take it away. So first and foremost, so I am interested in inventing novel trading algorithms by setting up backtesting and having a code generation system auto-implement novel strategies in parallel. And so this is actually the core idea behind a novel machine learning algorithm generation process that a company produced last year. The idea is pretty simple. It's that if you have strong evaluation, you can let the AI model handle the creativity by writing a meta prompt that invents strategies and a code generator that implements the invented strategies. And then they're tested with a really rigorous backtesting process. And so it only surfaces the strategies that happen to work really well for your personal evaluation. And so I think that a lot of interesting sort of novel algorithmic work can be automated via this process. So we'll basically sit down, put together a solid backtesting setup, and then have a model invent and code gen ideas to perform well on that setup. So that'll be interesting. Up next is Yolan.
Yeah, thanks everybody. So my ideas sound similar on a high level to Jeremy's. Basically, a long time ago, I wrote a trading bot that compiles a dossier of information about a stock and then makes a stock trading decision. But I ran into a bunch of trouble like backtesting it fast. And then the trading bot also does like code generation. And so we have to run like different pieces of code in different situations in order to compile like backtests on like historical data. So it's just a bunch of backtesting infrastructure. Once I get that done, then you can do more interesting things like with portfolio management and comparing trading strategies and stuff. But yeah, that's what I'm working on. Arjun.
Hi everyone. So what I'm working on is really more of a traditional investment fund. Ever since 1970, we've actually seen really an influx of immigrants into certain suburbs, especially focused around STEM jobs, such as, we're seeing an influx. We saw an influx in Edison, New Jersey. We saw an influx in Naperville, Illinois, near Chicago. Or we saw an influx in, of course, Fremont, California, which you all know. And what we've actually kind of seen is that the real estate prices actually jumping up about 5 times compared to housing around the other suburban housing around the area. And the thing is that, this is partly because of the community effect that it actually has when a lot of these immigrants gather together, especially focusing on STEM jobs. Some of the school districts rise much higher. For example, in Edison, New Jersey, we've actually seen that the school district around the local New York metropolitan area rose to the 4th rank, or, like in Fremont, we actually rose to the 1st rank. So we're trying to predict patterns for new suburbs to actually, as STEM jobs move outside of, the Bay Area or New York, we're seeing, we're trying to determine which locations and which suburbs will actually rise higher in real estate prices as more STEM-focused immigrants go to those locations. And we're actually determining how early stage those markets are and how well those real estate market prices will rise up. So we will basically create kind of like an investment firm who are actually predicting those kinds of trends and investing in those early stage trends to profit out of those trends. So please feel free to join my group, and we're actually trying to do the actuarial science on this, develop some data science models around this, and possibly sell this data or profit out of this data in some way. Thank you.
Very cool. Thank you, Arjun. Up next is Rob Lee on safe investment with one.
Hi, I'm Robert. So some people here, like Brett, talked about kludgy, old industries like mortgages, real estate, what have you. And in a way, startups are like that because obviously it's very difficult and kludgy and regulatory heavy to invest in startups. So what I'm working on now in the long run would be like, you can do safe investments on friend and family with your app. And just like, look on your app and you talk to your friend and over lunch, you click the button and there's the $10,000. In the shorter term, it's just easier to make it for like your typical Google engineer to invest $50,000 in a name brand venture fund. And I know this isn't really necessarily like AI, big data, quant focused, or my idea is not that conducive to that right now. But obviously we do want that data in the long run. So if anybody would like to, talk to me about that, and I'm happy to work on somebody else's project as well. Thank you.
Very, very cool. Up next, Manmohan on auto-generating smart contracts for mortgage applications.
Hello everyone. So we are basically building a platform that can dynamically generate smart contracts, and using LLMs, of course. So the contracts will be tailored and will be validated, and the security will also be checked using industry standard tools. And one of the unique aspects of what we are trying to create over here is the limitations of LLMs with larger strings, right? Let's say the blockchain address of your wallet or your contract address, that can be very huge. LLMs don't really do good with this kind of strings, so we are developing a framework that will not store your data, but it will help the LLM to understand what the entire context is. And by doing that, we are trying to make sure it's a one-click process where you can just go there, user can put its requirements, there will be a requirement shown to you, then you click on approve and you will have a smart contract deployed, including all the security checks and a unique LLM framework. So yeah, if sponsors from mortgage industry, I would love to talk to you about the entire workflow, because I don't really know. So that's about it. And I have my teammate YJ. YJ is there somewhere, too shy to come here. So we are open to someone with good knowledge of mortgage industry to help us. So that's it. Thank you guys.
Thank you, Mama. Up next, Bobby Zhang on currency finance.com.fun. Here you go. Bobby? He literally just updated this picture. Okay, Kyle, Network TH.
All right, so people say your network is your net worth, and I want to make networks. So you can see basically like interact. So here's context. I wanted to do something that's like really useful and could also generalize into the DRW problem in like a really obscure way. I did a conference yesterday. There's a lot of amazing people. I want to help connect them in different ways, but it's so hard to do that because I don't have all the information about how to create arbitrage across a social graph. For example, oh, this person posted on LinkedIn 2 weeks ago that they're hiring, and this person just happened to have posted on Twitter that they have this background in these 4 companies that are related. I should intro them. There's no way to do that. It's really annoying because I want to like help the network that I've created through a conference more. I would pay like 10K a month. I'd pay 10K for this right now. If somebody had this for me, I'd pay them 10 grand because I just threw the conference and now I want to make it useful. So I'm going to do it. I also think it's really interesting for explaining historical events in natural language because you can look at graph transitions. You can build the foundation, look at the graph as it evolves over time, and then ask questions to it. So I want to make like a massive database of historical like transitions of like people and capital and how it flows through the economy, and just see like does that work in a natural language setting. Thanks.
I think we have yeah, someone builds a great version of this. I will also happily pay attention for it. Okay. Up next, we have Elijah on integrating quantitative stock sentiment data into a model.
Hi, I'm Elijah. So pretty self-explanatory statement. So basically, I want to integrate stock sentiment data into a quant model, such as, for example, the Black Determinant model for portfolio optimization. So really, this statement means that there's 2 main parts. First is, the first easier part is basically building an agentic model to extract recent financial news. So this is helps to have the qualitative finance components. And the second is feeding this type of data into a quant model to hopefully optimize a certain portfolio or to perhaps also recommend another basket of stocks so that you have a more balanced portfolio or to perhaps achieve certain types of risk tolerant needs. Yeah. Thank you.
It's like a very grounded approach to stock optimization. Rethik on multi-strategy fund implementation with agentic pipelines.
Hey everyone, my name is Ruthik. I used to work as a quantitative developer at Taliesin, and what I noticed is multi-strat funds tend to have very specific roles for specific units within the business. For example, you have volatility traders, you have fundamental analysts, you have quantitative researchers, but they're all with the end goal of deriving like P&L from their research. And the idea of this project is to build specialized agents that are focused on like particular data sets, proprietary data sets, to derive novel insights. And the real understanding is how can we build like a feedback loop from these various agents within this pipeline and derive what changes have caused like some of this P&L. For example, you can think about backtesting these like their insights and provide a feedback loop, but also what insights contributed like to kind of give a measure to like the performance within a strategy. For example, can you see what fundamental analyst or fundamental agent had a significant impact over the course of the P&L?
Are you the guy who came from Singapore?
No, I came from New York.
That's Elijah. Okay, let's hear it for nothing. Up next, we have Savana on royalty farming, intellectual property, licensing, arbitrage.
Yes, arbitrage. Woo.
Right, yeah. So this is like AI times finance times healthcare. So has anyone heard of like Martin Shkreli, Pharma Broad, that sort of thing?
Yeah,
okay, cool. Right, so we're kind of doing the opposite of that. We can make money by finding lower cost treatments rather than finding a cheap treatment and jacking the price up. You can actually find low cost alternatives to an expensive treatment. And we're looking for someone that can search through PubMed. An example would be ketamine. Ketamine is super cheap as a drug. The drug called S-ketamine, it's around $25,000 a year. Ketamine is basically more effective. And then what we do is we work with health insurers to basically fund those clinical trials, or we have Web3 bounties to essentially fund the clinical trials. But we're looking for someone that has a bit of a bio background, understands how to search PubMed, and wants to bring down the cost of healthcare and create a new business model for affordable medicine. Cheers.
Very, very heavy. That's social good. So I guess I was going to pitch a second idea, if I may. I'm in love with this idea that prediction market. Sorry, who knows what a prediction market is? What I'm talking about?
Kalshi.
Say it?
Kalshi. Kalshi.
Kalshi. So the prediction market sort of came to fame in the recent election because people claim the polls are biased, and the folk who are looking at the prediction markets knew that Trump was more likely to win than was being said by the polls. Now, it is a mechanism that's very general. It's not just for politics. It lets you put money on a prediction about more or less anything. But that anything is currently really limited. It's limited to discrete settings. So basically, there's a binary, like will this person win or not on this date, and you can't make predictions for continuous values. So I'm proposing an extension of the prediction market to continuous values. So you can predict when something will happen. You can predict how much a thing will be worth. And there's mathematics for this, but there's no big platform that currently allows you to make these kinds of trades. That is, like, if you go to Polymarket, for a lot of trades, you'll actually see like 10 different discrete values over under a particular value, rather than having a continuous value prediction market. And so this is basically an extension of the prediction market to other frames, and then use an AI agent to make the predictions. So actually, the trajectory is that there should be a robust market of AIs that are trying to know what's true about the world by predicting the future. And you can see who's most capable of making those predictions as a measure of who's built the best truth system. What's up? Up next is Henry on the trade.
My idea is to have multiple agents that are looking at news, Reddit, X for meme stars, for crypto going up and down, and then also handling more traditional investing options. But and then also have agents that are as news comes in, that they start buying maybe slowly. And then an agent that will be looking to when to sell when that's getting very high, maybe it's gone more than 50% up or 20% up or whatever. And then probably another agent that monitors all that to make sure that these agents aren't doing crazy things. So yeah, I'd love to work with anybody. I'd love to work with it on that. Thank you.
Last but not least, Ivy Robinson. Historical Reddit posts about stocks turned into predictions of future stock motion.
Hello, so I'm Iv. Many of you know that the most reliable source of information on the internet is Reddit. So I'm interested in looking at big motions that have happened historically. Take for example, as an obvious example, GameStop. We go back, we look at the Reddit posts. How could we have known before that happened from those posts that it was gonna happen? And then can we use those techniques to make predictions about current stocks? I believe this could be applied to a lot of stocks, probably a lot of less meaty ones, and we could try to build up some sort of procedure for looking at Reddit posts to make predictions. This is right off the dome. My professional experience is not in finance. I'm open to working with anyone on this or other projects. Thank you.
Okay, any last desires to give a quick presentation? Going once, going twice. Okay, great. That said, I have a final announcement relative to House, and I guess kind of a personal announcement, as we have started a fund for investing in companies that come through the House, and we made our first big investment this last year. The fund at present is about $30 million, and so we are looking for really high quality investment opportunities. So if you are, folk you know, have a fantastic opportunity, let me know. I would love to potentially invest. It's called Principal Venture Partners, and a fantastic partner who I'm working on it with. And so hopefully the future of projects that originate in places like this is a little bit brighter. Okay, and that said, I guess. I guess final hackathon logistics. So you are currently on the 3rd story of a 4-story mansion. Please don't go upstairs, those are our private bedrooms, but do use this floor, the floor below this, and the floor below that to sort of sprawl out, get comfortable, and build out your projects. There's plenty of hacker space on all 3 floors. Lunch has already arrived and will be set out for you at a moment, but do feel free to enjoy it. And the intention is basically this. Spend the next 30 minutes hanging out with each other, having conversations, and deciding who you want to work with on your product. We'll get building, 5 o'clock, we'll come around and we'll make sure to get everyone dinner. And then tomorrow, basically, we would come back. Feel free to stay as late as you'd like. If you want to hack into the night, that's totally fine. But tomorrow we're going to have demos at about 7 p.m. So there's a solid 36 hours for you to build something incredible. So, build the AI trading system that automates the trading process for a certain type of trade that AIs can detect more quickly and efficiently, maybe off some data source that is superior to all data sources. Feel free to get ambitious and get creative, but this is the kickoff of the AI Finance Hackathon. Here's to you, good luck, and I have a lot of faith that tomorrow we're going to see some truly incredible inventions. Good luck.
And then just find a place to sit. Let's lock down a place. I think there's a great spot on the second floor. Do you want to be closer to this floor, or do you want to? What do you think? It might make sense to hear announcements and talk to the categories.
I'll come back to you.
So you want to stay on this floor? This is like, it's not
Yeah, and have you tried like that?
Wait. I should have the second one first.
So what people have done is they're building like search engines and it's not just like and you can type in like you can validate like start by say you have your idea and then you can go basically search like religious websites and see if people have this problem or like what solution solution. So it'll basically make a chart of like, hey, here's the opportunity, here's the problem, here's so you could probably like for your project, for example, you could usually have and literally like because otherwise how are you gonna like unless you have
I think I have a great idea. Actually, Reddit key stocks is hard to for university education.
Wait, what?
Yeah.
No way.
Yeah, really. Like the Reddit stocks, the meme stocks like BNB,
What did you
trade? I'm holding it at BNB and like really early. And then like GameStop and I really early.
Oh, you got it.
Yeah, I really early.
That's right.
Exactly. So like, and I was in the army. I literally like, I bought the stock at like 10-ish, and then I went out in the field for like for like a week, and then I came back and they're like, wait, there's a couple. I paid about maybe about $50K in like a single week. Then afterwards, I bought to like other like other like
right.
other like meme stocks, and then
once I'm done with it, and then I took a whole of the amount that you paid my university education. Then there was like, yeah, and then the rest is like paying money for credit.
What's the big one then?
No, it's private stuff. Like I said, it may not be appropriate for this app, but open to ideas.
Okay, so there's three big ones. AWS, AWS is the most well-known because they have a very good
I came to the zoo because I think he's around your age. And so like, I thought maybe.
So I guess the ones that's best well-known is, yeah. I got it. It's more like technology focused in the
I got it. Oh yeah, for sure. The problem I think with most of my competitors is they're trying to essentially boil it because
it's a mix of what?
The best deal.
I wish I did more like.
We're not going to be quiet.
Like, how did you try, like,
So we want to start first with thought process.
and you just saw the event, like, oh my gosh.
And then
So,
maybe within
so
a year,
I
we
already,
can get on board.
okay, so, yeah, but it's basically the year. So, I just went, because the more so I just graduated, and then I always wanted to go to the US. So that's why I graduated like a full time, so that I had like 3 months to like,
Yeah, but I'm happy to see that.
so I went to 1 month because my girlfriend's there, and my even had like a lot of talks there. Yeah, so,
Okay, so it's not like you for just this event.
oh, I actually picked this event because like it was the period where there were the most number of networking events.
It's insane, and like it's so insane that like SF itself is like 10x invested in the thing.
10x.
Like at least like every like even if like Austin's still pretty tech friendly, Seattle's pretty tech friendly, but even HubSpots are just like 10x less than SF, and everybody else is kind of like I'm Florida, right? And part of me is
Oh, I like kind of ideas, so like, cause like I'm actually looking for this is exactly
Yes, yeah. Oh, yeah.
It was venture capital. Yeah, but that
Right now,
But there's always
so it's like you're mapping one time.
Yeah, and like the friends talk that I'm taking no, he hasn't. Yeah, like probably was Friday. Oh, he did. Yeah, the numbers were lower. Yeah, but I think I did a test and actually the numbers we just do a sip of coffee right now. Like, from one answer to another. I think that there is a question about whether when we do it, we are reading from one and copying from one, so it's executing both on the same time. But, so are we doing double our numbers or comment cards to achieve that? But when I look up how people are benchmarking, the methodology we're using is kind of the recommended way to do it. It's super basic. I think it may be yeah, that's what they use to like terabytes. I need to calculate number by myself. Yeah, so numbers. Okay. I'll send it up
Say
And then they're like,
Oh, I'm fine. Good. No worries.
Came about in crisis where mortgages draft, they said that I have to give you a certain amount of information for us to make a decision on get a mortgage. You've got to get it now. I was have to get it 3 days. 3 days regular money would go
I was, but I feel like downstairs good there.
I wish there was something, but
And then downstairs with the, but I feel like, yeah. Okay.
I don't know. I have a dinner plan San Jose with my leave. Do you think what's the time?
You want to stay here until like, alright.
I'll probably stay here till like 5 or 6.
I mean, I like the caption together. That's good
I can take that stuff back, no problem.
That will still come tomorrow. Physical good.
No, we can leave it there for now. I don't think it's
Use AI to things. It just does everything very fast. By design, it's tuning, because you're like, oh, do this for us. It's like, we don't know, like, what is that? So the insight is then like how you actually to teach you what it just did. So you can actually the output. Yeah, but what is it to teach you? Oh, the thing you need to pass it. Yeah, kind of foiled it. Yeah, but I think it's really useful generally. Once you start working on it, I mean, it makes sense. I'm going to go up there.
right now we're just like, yeah, so like a nice area. Okay. I just ordered, I want to have lunch. I can spend like my own. I want to explore.
Oh yeah. It was the whole entire culture, so they created these different ways to find change the tools and loans. They'll create the loans for everyone, and they will so obviously you have incentivized the behavior. And then the market expanded and everybody's getting involved. You have a job? Maybe, I didn't answer your question. That was it. Well, you're not going to find it out.
What you're saying is not combining with the fact that versus saying how to make it
almost everyone in the United States
I think I can study.
Enjoying the view?
Yeah, it's very nice. It looks like there's some rain coming in across the bay.
Yeah. Cool. Have you had lunch?
Not hungry yet.
You find a team yet?
Not yet.
Drafting smart contracts. Creating smart
Yeah, I think what they should probably do is like kind of just pull out all the projects that like people can vote on individually, or just like put sticky notes and right, almost like
they put it on an Excel. Then like, yeah, I see the name, I see the project, but like I can't make it the face.
exactly. One of the hackathons okay. I mean, I kind of basically connect people and for either connect the people who
Reducing that dependency on this layer transfer between entities and reduce that sort of transfer by providing abstracted
Because you want to play the game. Like, and they're basically yeah, I mean, and they made it like, oh, like, all the features I was really but anyway, talking about, so did you build it?
why the hell do you ask me that?
Oh yeah, I think this is a product that you sell, at least in this case. Because you, and so like you don't even sell it as like, oh, like you basically do, so if you're organized, you be like, here's my product, that way you can connect people. And so now you're like, hey, let's connect to this guy, because I give you this and he does that, then you're gonna love it, you're gonna be part of it. So like, I think that's the ROI. You don't give it a sign. You're not like, hey, just download this thing on your app and then you can like that's, I don't think that's the product. It's the like, yeah, of course you need to be successful, right? But somebody I want to find somebody that works with me. And you can be in like various people like and so it's like I say like, well, not be far off the station
It's a big.
Like it should be somebody might be like, hey, maybe somebody's slow, somebody's like that. Okay, so mortgage company conference like so like I mean there's all these kind of things. I think that's why and you what you really buy is electric data and natural right? Like that would be important to think about so as long as you have a plan, I mean, it doesn't even if it's really the success of a product like this is really like so let's say it's recommended to you X, Y, and Z. How much what's the alpha of like something like this? The alpha needs to be positive. And you can recommend just like I could just to like it'll be like, yeah, it must be like that's yeah, so you, I mean, this is
Hey, do you know what's the Wi-Fi password?
Oh, I can share it here.
Thank you.
These things.
Were you at the democratized intelligence yesterday?
Yeah.
No way! I was sitting next to you. I feel like you were like. It's such. I've been here for like 1 week. I come from London. And
London?
Yeah.
I come from London too.
Oh, have you lived there?
Yeah, I live well, my family lives in London now.
Okay.
But I live in here. So
When did you move?
I moved for university and then for work. Just
How do you find the move? Because you grew up in London.
San Francisco is fantastic for college.
No, yeah.
How long were you in San Francisco for?
Until tomorrow. I've been for since last Friday.
Okay.
So I went to the basement to the media house, done lots of events. Yeah.
What do you do for work?
Machine learning, data science.
Okay.
But I started something on the side. I launched like a platform and I was like trying to connect with people, see if I can What about you?
I work in theoretical AI research.
Okay.
I'm not doing this hackathon.
Yeah.
I'm just at the house to work.
Get theoretical AI research.
Yeah.
Okay.
A lot of math. A lot of math.
Is it more on the algorithms? So let's say
Yes, algorithms, yes.
I did a PhD, but it was like applied machine learning. So I was building models for anomaly and detection in the electricity smart meters. I think it was Swedish. So I was building the recurrent neural networks, LSTM from scratch. Today I was wondering, are you working in?
So I use math, so fields like algebraic topology, enumerative combinatorics, in order to speed up the training of AI models. So instead of taking 6 months to train a GPT, it takes, let's say...
Like a better alternative to a previous
Yes, exactly. That's what I work in.
Yeah, there are so many things you can do. I was thinking the other day, so if we first do activation function, like switching from signal to the rectified linear unit, how much it improves, like the gradient growth. Then we had transformer as well. There hasn't been much like after the transformer to improve significantly.
So there are future paradigms. It's just a matter of.
What's your like?
We can't say.
No, because it have to publish.
Our work is we have NDAs.
No way.
We can't speak about universities. Yeah, I work with Harvard and Stanford. I went to Harvard myself, and they have contracts because there's national security risks with AI. That if you build something very good, then another country can steal it.
I'm like very much for open source.
Yeah.
I hope they still like everything. Like they need to be distributed. Because for example, they release like this $200 and not everybody. I feel like people in the not even in the UK, people from London who work in tech, most people 90% would
Very nice.
I'll
get back to work.
It's very like tough
PhD. PhD is difficult.
Very isolated.
It can be.
If you're like, I remember when I went after I finished my PhD and I did a fellowship where lots of PhDs who just finished wanted to transition to academia. We had similar like experiences with isolation, loneliness. You have friends who publish papers, you don't, you might feel like it's much harder. Very hard. Like an artist. Like being an artist and
Yeah, it's very theoretical, very kind of.
well, yeah.
Nice to meet you. What's your name?
Manalina?
Yes.
John.
John.
Well, where are you originally from?
Romania.
Romania? I have a friend from Bulgaria.
I'm pretty sure I'll see you when I come back.
When's your flight? Tonight or tomorrow?
Tomorrow afternoon, yes. I'm planning to come more often and hopefully we can accelerate.
Good luck.
But I wouldn't mind 2%. Probably, but the thing is, it's still 2%, so how many most would just go, as long as your product works and it's decent at getting license, how would you say that? I mean, that's BY. That's again one of those like and that's where the user preference comes, right? Like you can kind of have like, hey, what markets do you want me to apply with this standard market? You can be like, hey, half a percent go with crypto needs, 0.5% go with like fractional, 0.5%. Like you can diversify these things. Because like, what I'm saying is like the friction is really in doing that all that research and like and picking what to do. Like if I have $100, I can do 2 different things, whatever comes to me. But an agent can do that with like scale. So instead of me analyzing one needs and money, it'll be like this one has these momentum. So that's the one you go and I can more like, hey, you can go more than X, Y, and Z. I mean, that's a problem decision you have to make. Oh, right. You said 20%. Dude, I have the same thing with them. But hard to a point.
And actually, and then also when they had like consistent
So the thing is that they don't have their house page, so I think this is the same. Oh, they don't have
Now I wish I had another this idea because I just like 10%. It should be about 2%. 2%, we'll just take the wild bets. Yeah, like my dad is like he's a bank. He doesn't want to but no, like right? And even if I can tell you it's I'm like, you have to understand that this is something that's really going. When you, is there a strategy where you can that's all you need to do?
No, I think we do find that it's not just
There's several models. Or you can just follow Pelosi's. Just follow Pelosi's. How is she not in jail? Because that's what that's why I like I have a lot of respect for the justice system, but I also think that like my major glitch is that nobody wants to talk about. And why is she not in jail? If you and I did like 0.5% of that, like, I would be sorry as like 2,000 years of progress. Like she gets
I think I should be like 100% idea, but I think I put some like yes, Reddit was like stuff.
So you go to a bank, and say, okay,
yeah. Yes, it just you know, so I actually know the other one is gummy search. And I think the goal would be APIs and more because you don't want to be scraping Reddit and just like beating the game. But if you just like gummy search, you can type like personalized whatever math tutors, right? And what it will do, it will go basically also like slash math and see who
oh, sorry.
I see lots of graphs. So you just take your homework or building something?
That's my research.
Oh, nice. What do you research?
I work in theoretical AI research.
Okay.
Speeding up algorithms using optimization. Okay. I'm not participating in attack.
What kind of optimization?
That's where we use a lot of math. I'm just in a small sub-problem currently.
Okay.
We have this long proof and check one aspect of it.
Okay. What is the sub-problem? This is pretty interesting.
That's where
Are they crystals? Are they crystals? Or is it properties of combination? Okay. Good luck with it.
What do you do?
I'm an AI engineer. Yeah, but I'm usually not involved in the math research.
There you go. I like it.
What?
John, what do you do?
Just basically use LLMs in different kinds of human social interactions. Okay. So like right now, I'm interested in platforms where like I really like AI reasoning and trying to determine whether it's reasoning or not. Okay. Like I find that whole thing really fascinating. And I do believe it reasons like quite well. It's just really differently than humans.
Yeah. Where'd you work?
Right now I'm doing a consulting gig for like one of the big clouds. I'm helping them build an AI tutor to teach people how to launch AI apps.
Yeah, very nice. We'll bring you to the hackathon then. Did you just come?
No, I'm here for a while, but I'm Aditya, by the way.
Oh, what's your name?
Aditya.
Aditya?
Yeah, what's your
John.
No, I came to this one because when I first saw GPT-4, I was like, wow, finally the LLM can train. Because it's like right now. And then when I got into it, I realized you had to make it write code in order to read it. This sounds mundane, but this is like in July 2023. So I built like this whole bot. So I built this whole bot. But I never got the chance to like push it to production because at that time the API was really written and I put it on the shelf. Today I was hoping to take it back. I am going to take it back off the shelf. Let's see if we can get it into the dollars.
That's it. That's what you need.
We'll see. Yeah. Because alpha is only going to be alpha for a year.
Chase the alpha. Chase the alpha.
It's just like.
We're just a wordware guy.
Oh, really?
Yeah. So, you know, say that
Yeah.
It was great. Like, really, very left brain. Or right brain. Yeah. Breathing. And, you know, Most of the stories itself. Yeah. No, I think it definitely got like,
But now, in this case, would we say
a little bit of.
We basically will
But yeah.
have, in the end, you'll have algorithms that are like.
That's interesting.
That's basically strategy.
What's that?
And then we ask
Oh,
you the problem. Because
wow.
like, we use something
Five
that's
paying for
like
like,
machine, right? I could be like, man, you
3 to 5 seconds.
again, we're just brainstorming.
Yeah.
So, like, I could be like, hey,
So
these are the two or three places that I think
We are officially no.
Yeah, but I do know if like I'm trying to like predict if you buy this you will 10x.
Actually, we're about to close our friends and
potential
well,
but on the other hand, like
what? I don't know.
Like it still needs to work so that people think it like overall. So if you give this thing to sample size of let's say 1,000 people, the net positive needs to be at least like over the like if I have something like this and over the course of like 5 years or so, I only get 5%, then the 5 years right? So it needs to generate like statistically like average value. That's why all these things
Startup guys sometimes.
I just want to
Looked at that and said,
I feel like
I think kind of everybody's looking at the regardless of how that works.
which is like I mean obviously just comes
That's what I mean.
yeah, but you also have to normalize that and make it
That's the they're like different than like the website type of thing.
Are those like those people who get started become like the startup?
But yeah, you're always gonna need.
It's like a degenerate hedge fund. Yeah, it's a degenerate hedge fund.
Yeah, it goes in.
I like this TV very much.
And
But like, so it's not fun. Like you're.
I know you're not
it's possible that
I'll let you know.
Yeah.
based on this, someone said that
Yeah, right. Something. I mean, I don't know where you find this like that.
in terms of this order, I mean that's one of the
Yeah, how far do you want to be?
Yeah, exactly. And that's
Well, I think you need to.
Question.
Yeah. Because like.